Welcome back. We are looking ahead to the final interest rate decision of the year. It is out today at 2 p.m. Eastern. Chairman Jay Powell will then speak at 2:30 p.m. We are expecting a cut in rates. The futures market is pricing in a 95% chance that the Federal Reserve will cut rates by 25 basis points today. The Wall Street Journal editorial board writes this week, a question for Jerome Powell. Why cut interest rates now? They write, quote, progress against inflation has stalled and financial conditions hardly seem restrictive. Joining me now is the Wall Street Journal chief economics correspondent and the author of $1 Trillion Triage, Nick Timiraos. Nick, it's great to see you. Thank you so much for being here. And I know that the editorial board has an opinion in terms of where we are, and they're asking Powell, why cut rates now? And while you're not giving an opinion, it's the question that a lot of people are asking, and maybe some in the Fed. Isn't that right?
Good morning, Maria. Yes, that's right. I think there will be some people at the meeting that began yesterday who make some of the same points as in that editorial. So the other side of that, I think, why cut here? The arguments are really similar to the arguments at the last meeting, which is that you still think inflation is headed back to your 2% goal over the next year or year and a half. There have been a couple of firmer inflation reports. The core PCE number that the Fed is going to they use as their preferred gauge, looks like it ran a little bit cooler last month. We'll get that number in a couple of weeks. And so you would argue, look, inflation's coming back down. We still think policy is restrictive. And it is, it's a little bit of a finer balancing act here, because you're right. The economy has been stronger and asset markets, some of them are booming. And so you do have more questions now about whether you continue to go. And I think that's why if you do get an interest rate cut today, it's probably packaged with a little bit more hawkish or uncertain commentary around whether the Fed keeps cutting.
Yeah, I mean, the futures market is betting that the Fed will pause in January. But traders are also pricing in at least 2 more cuts in 2025. Can you really make that bet when you don't know what's happening with the Trump economy and what he's going to do with all his policies coming in? I mean, you say that beyond this meeting, the big questions for 25 come down to what is normal for interest rates in a post-pandemic economy. Tell me more about that, and how do you factor in what you're expecting from Trump, including deregulation, tapping into energy, extension of the tax cuts?
Yeah, I think, the Fed, even putting aside Trump or the change of any administration, the Fed already had kind of a tricky puzzle here, which is what is a normal interest rate in this post-pandemic economy? If you go back 5 years ago, the Fed thought a neutral rate might be around, say, 2.5%. They raised rates to 2.5%. 5-6 years ago, and the economy slowed a lot. And so they said, okay, maybe this is all the economy can take. Now we've been above 4% for more than 2 years, and the economy's doing fine. And so people are going to begin to say, well, maybe the new normal interest rate is something higher than it was after the financial crisis. And then, Maria, you layer on top of that the policy uncertainty. Do we see more tariffs? Do those push up prices? Do they slow down growth? Do you have tax cuts and deregulation that maybe helps offset any of the inflationary concerns you would have from tariffs? What happens with deportations and the labor supply? We have a number of potential policy experiments that we're going to see unfold here. And so I think that makes it awfully difficult to have much confidence in a forecast for a year or two from now.
Yeah, I mean, the Fed is also going to release its quarterly economic projections along with the rate decision. And I question sometimes if the Fed just talks too much, right? I mean, the last time it did so, you write in the Journal, the Fed predicted a full percentage point worth of cuts in 2025. Should they really be making these predictions and getting markets all excited about all these cuts? And then as time goes on, it changes. I mean, in your latest piece, you write this: Trump's proposed changes to trade, immigration, regulation, and tax policy could reshape the outlook for growth, employment, and inflation in the coming years. You say Fed officials will begin to grapple with those shifts at their meeting this week. So what about Trump's second term and how it will impact Fed policy?
Yeah, I just don't know how you have much confidence in a forecast. And so I think the trick for people, when we get those projections, they are filled out according to some base case. And you could think of the base case as the least unlikely scenario, right? It's kind of confusing, but you just don't have that much confidence in it. I think the alternative is you don't have anything, and then I think you'd have probably even more confusion than you have now. But the trick here is just not to anchor too much off of what they're writing down in those projections, because they are conditioned on a base case that you might just have very low confidence in right now.
That makes a lot of sense, Nick. So let me get your take. We're all focused on what Jay Powell is going to say at this press conference at 2:30. What are you going to be watching for? What are you expecting his messages to be today?
Well, I think, something the market places a lot of attention on that Fed officials probably don't put as much attention on is what is the median projection for interest rate cuts in 2025? So they had 4 cuts of a quarter point penciled in September. That's going to probably be lower at this meeting. Will they put in only 2 cuts? Will they put in 3? If they put in 2, that suggests just a lot more uncertainty about the pace of cuts going forward. And then I do think what Powell says about the neutral rate will be important, because they put down in those projections some estimate of what they think interest rates will be over time, their estimate of the long-run rate. It's been trending up closer to 3, but there are awfully wide uncertainty bands around that forecast. So you could put down 3%, but you might think maybe it's as high as 4%. And so will Powell say anything about how they're thinking about that? That, projection is really kind of your perceived destination for interest rates. And so like a ship captain coming into the dock, you don't want to blow right past your boat slip and slam into the dock. The Fed, if they think the neutral rate is higher, they may want to slow down rate cuts and just take some time here to figure out, well, maybe our destination is higher.
Yeah, I'm with Scott Martin this morning. Scotty, I think that would be a disappointment for markets in that scenario, but jump in here.
Maybe, but I think, Maria, that's the funny thing is if the Fed takes a pause, Nick, what do you think about the overall interest rate picture maybe calming down? Because we've seen a lot of volatility. We've seen rates tick up in the open market when the Fed's been cutting. So what do you think the downside is, though, Nick, if the Fed does cut and, say, cuts again a couple more times in 2025, even though the economy gets stronger?
Well, it's a good point. I think for the first time in a long time, the Fed and the markets are on relatively similar pages, right? The market only has 2, maybe 3 cuts priced in next year. If that's what we see in the projections today, it'll be a one instance this year where the market and the Fed actually sync up together.
The Wall Street Journal editorial board also wrote this morning that President-elect Trump should remove Michael Barr as the Fed vice chairman of supervision, highlighting his repeated failures to oversee the banking industry, Nick. I mean, look, this is about deregulation, and this is a guy who's wanted more regulation. He's insisted on more capital that the bank should hold. What was your reaction to that op-ed in the Journal today?
Well, I have heard that some people are pushing that idea. I think the question is, what does that get you? It may get you a legal fight. Michael Barr's seat comes open next in July of 2026, I believe. And so you're really getting 18 months of someone who's your own person. But you still have a board that has Biden appointees on it. It's not clear that a new vice chair would actually be able to get a whole lot through the board. And Michael Barr hasn't been able to get what he wanted through the board either.
That's true. Adam Johnson, jump in here.
Well, following up that, Maria, I'm curious, Nick, you're the ultimate Fed insider in Washington. Is there any talk of the chairman potentially leaving early if, in fact, some of his other governors would leave?
No, Powell was pretty clear about that at the last press conference. I mean, he gave 2 one-word answers, which were both no, when he was asked whether he would leave early and whether he thought the president had the authority to push him out before his 4-year term is over. So I think there's no question that, Powell is going to stay as chair until his 4-year term ends in May of 2026.
Yeah, and we expect that. I mean, we're not expecting President Trump to try to fire him, but he has been very clear that once his term is up, President Trump will likely not reappoint Jay Powell in 26.
Yeah, and that'll be an issue for the markets next year because, a year from now, people will want to know who the new Fed chair is going to be, even though that's still, a year and a half away. So it'll become a policy relevant question. Yeah. Probably, as soon as next summer.
Well, we'll see if President Trump is still talking about Kevin Warsh in that regard. Nick, it's great to see you this morning. Thank you, sir.